Hello traders, welcome to our weekly top-down analysis. So personally, I trade gold and Euro USD on my prop firm account, which I'm obviously not sharing here. I'm just sharing the top-down analysis and then the trades that I took last week. So I'm on the journey to become a funded trader. Currently, I'm trading my prop firm challenges. So let us begin with gold. So you can see gold is very, very bullish on the weekly time frame. The only thing that is visible for us to mark on the weekly time frame is that gold was ranging. However, it broke that new high. So that is a break of structure. That is a break of structure from the weekly time frame. From the weekly time frame, that is our break of structure. And then the order block which caused that break of structure from the weekly time frame is that one. However, looking at the way price is moving, I don't think it will get to that level anytime soon. So we are going to leave that order block. We are going to leave that order block pending on the weekly time frame until price decides to get there. We are going to deal with the recent price action. So on the daily time frame, let us adjust. That is the order block. That is the break of structure, and then this is the order block which caused that break of structure. Looking at the way gold is moving, we are going to leave that order block pending. So that is all on the 4 hour time frame. And then if we go to that is all on the daily. If we go to the 4 hours, I'm going to leave this order block down here pending because price is still far from that price. As you can see, we are up there. So we're just going to deal with the recent price action. So that is a break of structure. That is a break of structure. That is a break of structure. And then our order block, which caused that break of structure, is that one. That is the order block, which caused that break of structure. However, price did not react from that order block. Instead, it reacted off FVG. Price reacted of that FVG. Price reacted off the fair value gap. That is the fair value gap. That is the fair value gap. And then we had another break of structure. We have another break of structure there. We have another break of structure. And then the order block which caused that break of structure from the 4 hours. That is the order block. That is the order block which caused that break of structure from the 4 hours. And then we recently gold just broke a new high. Gold just broke a new high there. Gold gold just broke gold just broke a gold just broke a new high. Gold just broke a new high. That is a break of structure. That is the break of structure. And then the other block which caused that break of structure is right there. So that is where from the way price is moving, that is the other block that I'm going to be targeting to enter the market. From the 4 hours, if we go to the 1 hour time frame, from the 1 hour time frame, we can be able to see that okay, this already played out. Price mitigated the FVG. Price mitigated FVG. And then we had a block of structure. That is the other block. That is the other block there. And then as you can see, gold found support at this level. This is the support which was holding. I was expecting last week for gold to break this support so that it can come back to this order block and mitigate it. However, that did not happen. It came back for the second time, it did not happen. For the third time, it did not happen. So this is an indication to me that price is very, very impulsive to the upside. So it's not going to, I'm anticipating it's not going to come back to this order block. So I'm going to leave it pending. I'm going to leave that order block pending for now until price decides to get there. Until gold decides to get there, I am going to be targeting this high. So gold broke a new high today. Broke a new high today. That is a break of structure. And then this is the other block which caused that break of structure. So I'm going to be targeting this level. I'm going to be targeting that level because gold will bounce off at this support. It bounced off at this support. So the most realistic order block to target on gold is obviously that order block which caused that break of structure. So that is the order block that I'll be targeting on gold, and I'm going to be placing a buy limit. A buy limit on gold. That is the order block which caused that break of structure. And then our fair value gap. That is there. That is the FVG. We just change the FVG, the other block to blue to distinguish between FVG and other block. FVG and other block. FVG. So it's looking like price is retracing. We've broken the structure. It's looking like price is going to retrace into this FVG or the other block. So I'm going to place a buy limit on gold because everything is aligning. We've just broken a new high. following our strategy, which is SMC. Whenever price breaks a new high, it leaves behind an order block or FVG. So when price breaks a new high, we always wait for price to come back to our FVG or order block to mitigate it. So I'm going to place buy limit coordinates. Our stop loss is going to be between this our low, which is the last low, just slightly below the order block. This line is going to be our stop loss. So our stop loss is going to be at 3632.67. That is where we're going to put our stop loss. And then our entry price is there, the FVG, because gold likes to react most of the time at the FVG. The last two of my entries on gold have been from FVGs. So I'm going to be placing my entry point at that price, 3657.39. 39, and then take profit. You can take your take profit at that high, or you can decide to leave you can choose to close, you can choose to open two positions and then one leave it running, wait for gold to perform new highs. But these are the coordinates that I'm going to be placing my buy limit on gold as everything is aligning, following my strategy that I always trade, which is SMC. So that is all on gold. That's what I'll be waiting for tomorrow or for the rest of this week to see what's going to happen. And then if we go to Euro USD, on Euro USD, let us start. So on Euro USD, we are starting with marking off our supply in the demand zones. So that is our supply zone. Supply zone on our weekly time frame. Always begin our analysis on our weekly time frame to get the overall trend. So that is our supply zone. That is our supply zone. And then we have our demand. That is our demand zone. That is our demand zone. Already from the weekly time frame, we can be able to tell our buyers Euro USD is in an uptrend, is in a bullish, because price is moving from demand headed to the supply zone. So we still have some pips left for price to get to that supply zone. So we are still in an uptrend. We will only change our bias or wait for confirmation when price gets to that supply zone, but it's not yet there. So for now, our bias is bullish. If we go to the daily time frame, from the daily time frame, you can be able to mark our resistance, and support levels. Resistance and support levels where Euro USD has been ranging. Resistance. So that is a level capable of sending Euro USD into this range, still that resistance. So it's important to mark your market turning point. So you know when price might reverse. And then we have our support down there. We have our support down there. We have our support down there. And then if we zoom in, and be able to study the recent price action, you can see that price has broken these highs We have broken those highs. That is a break of structure. That is a break of structure on the daily time frame. And then that is the order block, which caused the break of structure, which is that one from our daily time frame where price is reacting. So I'm expecting for Euro USD to break that resistance and go and form new highs, because from our weekly time frame we are yet to go and tap into that supply zone. So our bias is bullish. And then from the 4-hour time frame, that is a break of structure. And then this is the order block, which caused the break of structure. And be able to see that when price broke structure, it always comes back to the order block, which caused the break of structure to mitigate it. And we are pushing up. We are still pushing up. So the strategy is very simple once you master it. Once you back test and you know how the instrument you are trading behaves, to be easy for you. Just wait for a break of structure, mark your order block, mark your FVG. So this is what we have. This is what we have on the 4-hour time frame. And then as you can see, price is still breaking new highs. So this is the recent price action. That is happening. So we are going to be monitoring that level. That is a break of structure. That is a break of structure. Break of structure, and then that is the order block, which caused the break of structure. So that is where I'm waiting for price to come back, because we have broken this high. I'm waiting for price to come back and to mitigate this order block, and then we'll continue pushing up because our bias is bullish on Euro USD. So that is our order block. That's it on the 4 hours. And then on the 1-hour time frame, this is what we have. So on the 1-hour time frame, this is what we have. So we've just broken a new high. That is our order block, which caused the break of structure. That is our order block. We have broken a new high, and then our fair value gap. That is our FVG present. That is the fair value gap. That is our fair value gap, because Euro USD also likes to react from the FVG. So I always place my entries on FVG. So if price doesn't mitigate the FVG, and it will come back to the order block. But most of the time, Euro USD and gold, they like reacting off the fair value gap. So that's what I'm waiting for. I'm going to place a buy limit on Euro USD. So this is a trade that I will see if it plays out tomorrow. So my stop loss is going to be below this low, and then my entry price is going to be at that FVG, and then my take profit, I'm going to target that resistance there. That is where there my TP is going to be, because that resistance can as well just decide to push price back down because it has been ranging. So you place your take profit at that point. But yes, that is what I'm going to be. That is what I'm going to be waiting for on Euro USD. I'm going to place a buy limit there. Or you can always wait for confirmation. Our confluences are intact. We've broken a new high. We have our order block present, FVG present, and I'm seeing the liquidity that price will sweep, which is there, which is the trend line liquidity that price will sweep to come and take us into our FVG or order block. So that's it, traders. That is how I do my top-down analysis every week before I place my trades. And if you did get something out of this video, please give it a thumbs up, drop a comment in the comment section, consider subscribing to the channel, and see you in next week's episode. Happy trading.